Good morning. All right, we are live. We're going for it. It's great to see so many people in the room today. So thanks to everyone who's joining us and sticking here since the morning sessions. I know there's a lot of people that have traveled the long distance here to be with us. Huge thanks to EEX for putting on a great event and for having me here and organizing all this. Just a brief introduction. So my name's Justin Colley. I work at Argus Media as an editor of the European Electricity Report, where I've been for 12 years for my sins, if you want to put it that way. And excited to introduce this excellent panel, who we're going to be having some very serious discussions with. So again, just some quick introductions here of everyone who I've got. So on the far right, Steffen Köhler, the CEO of EEX. Great to have you here, Steffen. Takahiro Izumi from Tohoku Energy Trading, who I can say has certainly got the prize for traveling the most miles in order to join this panel. So we appreciate the efforts made there. And next to me here, Philippe Vassilopoulos, the Director of Product Development at EPEX Spot. So a pretty good panel here, and I'm very excited to be part of it. All right, so what's the topic of today? Sustainability, right? That's the word, the headline on all the flyers, what we're here to discuss. And when we talk about sustainability in the energy sector, what comes to mind? You know, renewables, climate change, keeping the industry going, and let's face it, stopping the planet from turning into a burnt crisp, hopefully. But what does the word sustainability itself mean, right? It means keeping things going, stopping things from not existing. And we're going to look at that in a slightly different context now, which is the sustainability of the market, which is something that can be overlooked perhaps when people are talking about sustainability, but now it is right at the forefront of the discussion, right? At an EU level, people are talking about, is this market sustainable? What do we need to do in order to keep this market sustainable? And people are frantically searching around for ways in which to respond to this. Just quickly, Steffen, this is something that we need to be aware of and people are discussing now, right? This is changing the discussion about what sustainability is.
Thanks for the question, Justin. My immediate reaction still would be sustainability, and primary focus is the environmental aspect of it. This has to a lesser extent to do with the fact that I'm working for an exchange. I'm a human being and I live on this planet. This is the motivation for stating still environmental aspect of sustainability is primary focus. Now we all know that a key element of this is, may I still call it a transition? For all of those that have participated in the earlier panel this morning, we learned that it's no longer called transition, now security, but may I still call it the energy transition from fossil to renewable? This is the key element, and as someone who works for an exchange, I know what our mandate is. Our mandate is to support the process of funding this transition process. This includes a fundamental assumption that there will be a market and a functioning market, and this is currently being challenged. We all know that. I have the feeling that we have to stand united and help the market infrastructure to overcome this challenge. The sooner that we left this crisis behind, the faster we can go back and put the focus on environmental focus and priority of sustainability as such.
Thanks, Steffen. Yeah, really good points. And just to touch on what you mentioned at the end, which is getting through this and then having a market set up in order to allow us to get through this. It's a crisis, right? There's no denying that. And so the EU, national governments, regulators are looking at ways in which we can keep the markets running in order to do that. And they're looking at different ways of intervening in the market, right, to protect consumers, whether you do that at the wholesale level or the retail level. And there are some, we can say, mechanisms that have already been implemented in some countries. And there are questions about whether that intervention in a market is actually having the desired effect. Philippe, we've got the example with Spain, right? What do you think are the potential dangers or just generally the effects of intervention, heavy intervention in open liberalized markets?
Heavy intervention is dangerous because it's going to mute. It has the risk of muting the price signal that is coming out of the market today. And this price signal is key if we want to do what Steffen said, meaning getting out of this energy crisis as soon as possible. That can only be done with massive investments in non-fossil fuel-based generation, which is actually getting the biggest margin out of the situation where price of gas, price of oil are skyrocketing. So the main point is not to intervene in a way that would limit this price signal or that would kill the investment waves. And in order to do that, you don't want to impose too strict price caps. You don't want to change the way that the market is cleared, because if you do that, you're actually taking away the potential for reaction from the market. And especially on the consumer side, this is something that is very much missing from the market today. This is a key element to get out of this crisis. And if we mute the price signal, we're not going to get the reaction from the consumers. And that means we could end up in a situation like Spain, where you actually increase the consumption of gas instead of reducing it. This is typically not the type of reaction that we need. So these mechanisms can be dangerous. They can be very dangerous in a very interconnected market. So what happened in Spain could not happen in France or Germany because of the amounts of interconnection. That would mean that the domestic consumers would then subsidize the consumption of gas for the neighboring countries. On top of that, it's changing cross-border flows, which are not necessarily optimal today because of the artificial price of gas that is submitted into the electricity market in Spain. So this is not a mechanism that we would like to see generalize. More generally speaking, I would tend to say any intervention that changes the allocation of the market is going to divert us from our key objective to get out of this crisis, and that means making massive investments in generation, but also in infrastructure, in transmission and distribution grids, in battery storage, in hydrogen. All of that will not happen if we mute the price signal. So we have to be very careful in the way we intervene. We should not intervene during the market allocation. It's better to intervene ex post, but even that is dangerous because it can erode the trust that the investors are putting in the market. If they realize that when the prices are high, the profits are always taken back, the investment is going to be impacted negatively.
Yeah, thanks for that. I mean, you've touched on a load of good points there, and Spain is a really good example where the ultimate desired effect, which is not what's actually happened, gas-fired generation is the highest it's been for years, right? And ultimately, the problem we're trying to solve is gas supply. And by intervening in the market in a way that segregates parts of the market, actually is causing a great issue at the root cause. Steffen, do you have any comments that you want to make on this and the potential dangers of really heavy market intervention?
Can only repeat what Philippe said. I think we all agreed that the price levels, and particularly what they mean to private households, businesses, and particularly the ones who are specifically exposed to energy prices, if not to say vulnerable, requires political intervention. That is understood, but I'm totally in Philippe's camp. That intervention should only take place after the market has settled on a certain price. Philippe gave you an example on the demand side. There's examples where actually intervention on the supply side did not accomplish what it was supposed to accomplish. Australia, there was a price cap on the supply side, and suppliers who had higher production costs then stopped production, and the shortage on the supply side was even increased. So you see, this is the reasons, these are the examples that we make reference to when we say such intervention should only take place after we allowed the wholesale market to settle on a certain price.
Yeah, I'm glad you brought up Australia, because what happened in June was, you can say a disaster for market operation. They had to stop the market operation. But going more globally than Europe, then can allow me to segue nicely to Izumi-san. In sort of 2016, Japan was buying a lot of gas on the global market. So from your perspective, how would you see, or what comments do you have to make on the importance of the structure of liberalized open markets?
Thank you, Justin. And first of all, I want to say thank you to all EEX friends, Steffen Köhler, Bob Takai, and to have given me this opportunity to discuss power market with such a big European trading community. And moving to the question from Justin, and 5 years ago, actually, we were not paying much attention to the gas market price, actually. Even Henry have TTF, or maybe even JKM, we are not paying much attention, to be honest. Because most of the LNG coming to Japan was priced in a long-term contract and priced by crude oil, actually. So best thing we were watching was only crude oil at the time. However, LNG changed their picture dramatically. And LNG is connecting the gas market, US and Europe, and even in Asia. So now we have to pay much more attention to the gas market. So that's the reason why we changed the pricing model to the JEPX. So JEPX is a day-ahead physical spot power auction. And we used to be pricing based on the long-term LNG, but last December we changed the pricing model to JKM. So these days, JEPX, so Japanese power price is more frequently catching up the gas market now. So that means, JPX is following JKM, and the gas traders are trading JKM and TTF spreads. So internally and globally, that keep affecting each other now. So that's what's happening in the market now. So, and additionally, now we are able to trade cleared futures on EEX. And that really helped a lot last 2 years, because where in Japan, we are also facing lots of troubles in credit. And even Epco Energy Partner, that is the biggest retailer in Japanese market, they said they fell into a capital deficit last week. So actually, the problem is not only in Europe, that's happening in Japan. So we are actually in the same ship. That's my view.
Yeah, this is all segueing too perfectly. Yeah, Izumi-san, bring up the last point of credit right at the moment. Maybe a few years ago, it wasn't a huge issue when all energy prices were super, super low, the lowest they've ever been. Now they're the highest they've ever been. And the cost of trading is too much for some people. We've seen in the last few days, Finland, Sweden are having to effectively bail out their utilities, providing liquidity, billions and billions of euros, right? And that's not sustainable, if we want to, reference the word that we're using for the whole event. This is something that's come into far more importance, and it also combines with the topic of counterparty risk, right? If you don't have the liquidity to trade, then how can you be a reliable counterparty? And this, I guess, is the function of an exchange, to remove that counterparty risk. So I'm just going to jump back to you, Steffen, and maybe you can just share some views on, how EEX has responded to what's happening in the market, in terms of the credit issues that people are having.
Number one, what we have observed in the last weeks, if not to say months, is a strong push towards cleared transactions. Given the high price levels, of course, the collateral requirements for such transactions increased as well. And nevertheless, we saw this very strong push towards clearing. And I think that speaks for itself. People trust cleared transactions. People trust the process as such that is meant when I use the word clearing, so that you have to collateralize, that you are able to net. You're not only able to net your buys and sells in one product, you're able to net, if you deal with a central counterparty, all your buys and sells across products, across asset classes, across counterparts. That is the value that people see in these days, and this is the fundamental reason for that strong push that we are seeing. That means for us as a clearinghouse and an exchange that we have to look, is there improvements that we can implement? And I give you one example. Of course, in these days, the question is every single day on the table, what is the eligible collateral? And we have broadened that. We have just recently introduced EUA as collaterals, and that will continue. This is the reason why I mentioned it. That will continue. All those improvements, all these suggestions that were made, particularly in the last couple of months, of course, it is our duty to listen to our customers and to implement such improvements. That was the clearing layer. There's as well improvements on the exchange layer. I joined the EEX family 10 years ago, and ever since it was a given that we settle the power products at 4 o'clock in the afternoon, where gas is settled an hour later. In these days, where we face very high volatility, of course, all those customers that are not only active in one asset class, but several asset classes, have a very high interest in that the settlement takes place at the same time, because the spread is what matters to them. So we were approached by numerous customers who asked for harmonization of settlement prices and not settlement prices, but settlement windows, should I say, so the particular point in time over the day when the settlement prices are determined. And they asked for harmonization. And this is what we started, and we delivered in a first step, a first shift, and a second one will come later this year. See, all those questions were not on the table before the crisis started, and I think it's fair to say the crisis did not only start a couple of days or weeks ago, it already started in autumn 21. Since then, improvements have been delivered, and I would think it's fair to say it's the duty of all of us, not only EEX, all exchanges, all clearinghouses, to have a high-frequent and in-depth dialogue with our customers. What is the next improvement that we can deliver here?
Yeah, 2 points in there that I thought were particularly good. Firstly, the harmonization of settlement prices. As you said, a couple of years ago, that wasn't an issue because the last hour, half an hour of a market, you might see a 5-10 cents move. Now you're seeing hundreds of euros movement in power contracts in less than an hour. So yeah, that's a good way in which you've responded to that. And the other point, which I thought was quite good, is that we have seen over the years that the market has shifted towards cleared trading, but it's done that voluntarily, right? There's no regulation in place saying that a utility or someone needs to have a certain percentage of their portfolio hedged through derivatives. They've just chosen to do that because there's obviously a benefit in having the counterparty risk taken away by the central clearing counterparty. So yeah, that's what's happened voluntarily. Philippe, do you want to add any things from maybe a spot perspective on the role of clearing in the market?
I would focus more on the operational efficiency of the exchanges rather than clearing it as such, because for the spot products, I mean, clearing is less of an issue than it is for derivatives, of course. But what's very important at the power exchange from the spot perspective is that you need to have this market up and running. You need to have it every day because that's how you schedule your assets. The signal that is sent daily from the market is the one that starts the thousands of installations across Europe, or that guides the consumers on how they're going to use their power based on the price. So without this signal, you don't know how to start the assets. You don't know how to optimize the flows. So this is very important that the spot market keeps up and running, especially in these circumstances. The second thing is, with the current price level, of course, the risks are a lot higher. So you want to make sure that you have the excellency in the operations to make sure that there are no mistakes, that the market operators are fully aware of what's happening and how they deal with the different situations. To give you an example, you've got cancellation of trades. When the price was 40, was not such a big issue, but when the price is 700-800 euros a megawatt hour, it becomes more of an issue. So you want to make sure that this is well addressed, and that's our main duty, operating, being here every day and bringing operational excellency.
Okay, nice, thank you. Izumi-san, you mentioned to bring us to this part of the conversation, the issues with credit with Japanese companies. Can you maybe give us a bit of a view on how things look from over there?
Okay, and before that, actually 5 years ago, when I set up my Bloomberg desk, Bloomberg screen, actually I was not paying a real-time price service actually. Only delayed one was enough 5 years ago. Of course, it's not now. Of course, I'm paying real-time price fee, but things really change, and market, and likewise, I mentioned earlier, in Japanese market, we are really facing the credit issues now, because we have more than 700 retailers in Japan, only in such a small island, 700. So even in top 10 ranked retailers, they declared bankruptcy last 2 years with 30-40 billion yen deficit. So the tradable clearing products is really big help for us, to be honest. Yeah, so I really thank to you. And having said, another headache is JKM now and LNG. Well, 5 years ago, well, 2 years ago, so one cargo of the LNG, notional amount was only $20 to $25 million. Now, a cargo of LNG is now $200 to $250 million. It's not cheap. So we keep increasing balance sheet, and even Japanese trading houses are getting a bit nervous. There's cash on in and out. So that is what's happening. So.
Yeah. I mean, the rise in the cost of everything, right, has just been a couple of years ago almost impossible to imagine that it could have been. Even probably 6 months ago, we would have been pretty surprised if we'd had a sort of snapshot of how the market's looking now. Okay, so this week has been pretty busy. There's been some papers that have come out from the EU about how they want to step in and regulate the markets, potentially switching from the traditional marginal pricing mechanism to an inframarginal price cap, which seems to have opened a lot of cans of worms, and especially in terms of how that could potentially interact with the forward market and trades that have already been done. And, you know, over the last sort of weeks or so, there have been people saying like, oh, at what point do you suspend trading? Is that a thing that we should do? The EU has recommended not doing that, by the way. But I think at this point, it's good to take a sort of step back, and we see how existential we want to get at this point. But Steffen, it's kind of good to remind ourselves, I think, what is the role of an exchange, right, in the market? And when people, you know, are calling saying, oh, should we have trading suspended? What should we do? You know, I think it's important just to reconsider that issue.
Izumi-san mentioned it, Philippe mentioned it. It is our mandate to send out a transparent and reliable price signal. Now, this sounds somewhat theoretic. The practical value of that is, the two questions that we need to answer is how to allocate resources in an efficient way, how to allow an investor to make an investment decision. This is the practical meaning of when we say we have to send out a reliable and transparent price signal. This is our core function. And Philippe is totally right. This is the general aspect of it. Day-to-day operations then obviously is absolutely of importance, in particular in these days where traders and other market participants need to price their assets any minute, to say. We have discussed interventions. We're curious to see and learn what the summit of the energy ministers tomorrow will decide. As I said earlier, what we recommend is that any intervention only kicks into the game after the wholesale market was allowed to form this price signal that we were talking about and send it out to the market and do the correction afterwards. If you look at us, what we have done is we broadened the eligible collaterals with our clearinghouse. We were strongly recommending and still are recommending that liquidity has been made available by the government to help those who face issues in these days. The process as such works, and it worked as well in, and I don't have to tell you that we just saw a couple of very stormy days in the recent past. It as well worked in those stormy days. Trust the process, but help the ones that have issues to meet the requirements, in particular the margin requirements that are then calculated based on this process.
Yeah, I think that's a fair point, right? There are always going to be days in the market when you have volatility, right, beyond what you normally expect. And to restrict the ability for people to trade, to close, or to open positions is just going to send panic into the market, right? We've seen that before, and sends, I would say, quite a dangerous signal. I think one of the other dangers with extreme market intervention is, as you said, the market has worked. The marginal pricing structure has worked for years. So the question is, and this is what we're talking about, right? Is the problem the market structure, or is it the underlying issues within the energy industry? Which I think it's seems to me anyway fairly clear that that really is the problem. And we need to address those, right? They need to be addressed. It's going to take some time, for sure, to address that. It's not going to happen overnight. But we need to start working on it now. And I think one of the things that's important is you talked about the role of the exchange, Steffen, is to see, okay, what do we need to do moving forward? Because we have to stay optimistic, right? and we have to and be confident that we are going to move forward out of this situation and things will return to normality. So just thinking about that, and Philippe can just maybe ask this to you. What going back to Steffen's role of the exchanges, what are you guys doing? What are the exchanges doing to support this tradition, to go back to the idea of sustainability, right?
Thank you, Justin. Before going into what we are planning or what we have done to support that, I would like to make this point about marginal pricing that we know now for 2 decades, and also from an academic perspective, that changing the price formation mechanism is not going to make things better. It's not going to make the high prices disappear from one day to another. Actually, we know for 2 centuries now, since Léon Walras, that there is the law of one price. There can only be one price for the same commodity at the same time. So there isn't any design magic trick that is going to make all this evaporate. And this is, I think, very important. The market has been working well. It has been reflecting what's happening on the fundamentals, and it's sending a very important price signal that we need to listen, that we need to accompany if we want to get out of this crisis as soon as possible. And that's what we are working on at EPEX and as a group, I would say, because I think more than ever the short and the long term combine in a way that is needed, that is a key requirement for the future. I'm thinking of the link between the short and the long term markets for power, but also the short and long term markets for guarantees of origin to support the development of more renewables. If we want to address this issue with high gas prices today, we need to invest massively in renewables, especially because the time frames are relatively short. We don't have time to double the nuclear capacity across Europe. And that means helping the integration in a market-based way of a lot more renewables than we have today. And that can be done, for example, by the markets of guarantees of origin I mentioned, but also by financial instruments that allow sharing the risk between the market participants. We are working, for example, on indices that reflect the weather-related patterns, for example, wind or solar or temperatures, and these feed or work perfectly well with the long term, because we need both to work well to support the industry that is going to develop in the coming years.
Yeah. One of the things that you said, and we kind of mentioned this before, is the interaction between the forward markets, the long-term markets, and a spot price, right? In that the forward markets are settled against the spot index, right, for the period of delivery. Now, if you take away the market structure where you have that, then how does the forward market and the spot market interact, right? One of the things that the EU actually raised as a potential issue of bringing in the inframarginal price cap is that you're going to get a split of liquidity, right, between what's going on the exchange and people potentially going to OTC. So if you look at how the markets have developed now, and one of the things that the EU has always been pushing for, right, is an internal energy market, to have markets coupled across all of Europe, especially starting with Western Europe. But even this year, it's branched out so that most European markets, spot physical electricity, are coupled. So you have the implicit auctions, and the idea of that is for the social welfare benefits, right? You are distributing the cheapest form of electricity as much as possible for the benefit of the continent. If you suddenly mess with that arrangement and you start pushing the liquidity around to different parts of the market, then that doesn't work, right? And then we're back to everything that we've been working on for the last sort of 10, 15, 20 years.
Absolutely, and it's easier to regulate the exchanges because they're in the middle of the market, but we're not alone. There's OTC trading, there are bilateral deals, so you can't just focus only on the exchange. And this is very much a risk that we are seeing today. This has to be more global. In general, I would be against the intervention in many forms. Of course, there is a fuel poverty issue that needs to be tackled by authorities, but by intervening in the market, there will be be a lot of arbitrary decisions. If you put the price cap too low, then you have the issues that Steffen mentioned that we saw in Australia, where the market is totally malfunctioning, and that is even worse than the situation where you have high prices and then you settle in a redistributive way ex post. But again, even this redistribution is dangerous because it takes away trust from the market, it takes away trust from the investors, and that's what we need today. If we want to move away from this current situation, we need massive investment.
Yeah, exactly. It's all about sending the right price signals, right, to in order to get people to invest in these technologies that we need. And I think, yeah, just to go back to you again, Steffen, I mean, it seems like almost an impossible scenario, right, to come in and implement these heavy regulations on the market, as we've known it for years. And then what happens in, say, 5 or 10 years' time when we do go back to normality? How do you then say, well, we need to remove these price caps and go back to the market that we had before? That's taking, as you said, Philippe, it takes trust out of people in the market, right? And I think that's dangerous.
You used the word earlier, and I think this is the key word in this debate here, welfare. One way to create welfare is to allow us to find the optimal production mix to deliver energy, right? The most efficient way how to meet the demand side. I think we should separate that question from the question how to distribute welfare. So let us work according to the process that was developed over the last decades. Let's form the price signal in the way that we have designed it, and let's send out this price signal in order to generate the welfare, and then have a separate discussion how to distribute, and that would come back to the points that I made earlier. Those who are in particular exposed, if not to say vulnerable to high energy prices, help those, and that is the political discussion. I already made reference to the summit tomorrow, which is just another milestone in this political discussion, where I would say this is the second part of this question.
Yeah, okay. Izumi-san, just come back to you. You know, you've seen how things have been unfolding in Europe, right? The people are just talking about sums of money all the time, right? More money needs to be used to protect the consumers, which in a sense is fair, but then the question is where does that money come from, and who pays that money back? You know, what sort of suggestions or lessons do you have for Europe? And you know, what do you think is the way that we need to tackle this?
Yeah, as I said, this energy crisis is not only for Europe, it's global crisis, differently. And because Japan is also sourcing LNG from Russia, and it's a Russian second-lane project in Far East, and that is 10% of the total LNG demand in Japan. So far, Japanese trading company decided to maintain the stake in the project, but who never knows what will happen next. And Japan has long-term LNG contract, which covers roughly 70–80% of what we need, but we are so concerned on the next year, to be honest. And I think the competition in spot energy market will be much, much harder next year, because Europe will be the big buyer of LNG, East Asia, South Asia. Everyone else will rush into short-term energy market. I think that would be the big headache for us. And the suggestion from us is, I think we have to prepare optionality as much as possible. And likewise, and last month, our Prime Minister Kishida said he would commit to restart 7 of the new nuclear power plants. This is a bit amazing because, as you know, 11 years ago, we had a big earthquake and tsunami, which caused the Fukushima disaster. However, now, more than 50% of the people are saying yes to restart nuclear power plants now. Yes. So, and actually 7 of the one nuclear power plants is ours, actually, and we're gonna restart differently in 2024. And not only that, actually we have the very old, oil-fired power plant, over 40 years old, and we were scheduled to shut down this year, but we had to extend shutdown under these circumstances. The price of the oil-fired power plants cost is now cheaper than gas-fired power plants with JKM. So kind of things, we have to do everything to tackle big north wind from Russia. So we have to do everything what we can do. That's my personal view. Yeah.
Sounds very similar to the questions that we have on the table.
I was going to say, it's fair to say that nuclear has been somewhat of a discussion point in Western Europe as well. And yeah, just the way that things have developed, as you said, right, gas-fired generation being more expensive than, well, pretty much everything else, really. Okay, we're going to just have some questions in a moment. Hands are already going up. Hold on. I just want to give some opportunity for any closing remarks. Philippe?
Yeah, maybe one last point, because I think there's a bit of misunderstanding when we talk about windfall profits and infra-marginal rents, which are excessive. First of all, because for the last 2 decades, when these were too low to cover fixed costs, nobody really cared about it. And now they're very high, but for who is benefiting from that? At the end of the day, I think we have to look at that before intervening in a blunt way in the market. If some renewables who had subsidized fixed costs are getting a very high upside, yes, this is an issue, but in many countries they're giving it back. So this is going back to the network tariff or to the consumers directly. Same for, I mean, the nukes. First of all, the nukes are not here so far. So how can we say they're making such a big scarcity rent if, for the time being, they're unavailable? And that is the biggest issue we're confronted with. How are we going to deal with this winter? With low hydro reservoirs, with an absence of energy in terms of the gas that has been flowing to Europe, the nuclears which are unavailable. So I think there is a short-term issue that we need to tackle, all as an industry, and this is the urgency here. But we shouldn't show windfall profits as the scarecrow, because these are the ones that are going to bring the next wave of market-based renewables in the market. So by muting them, we are cutting ourselves the opportunity of getting out of this crisis.
Yeah, I think there's a lot of talk about this winter. I think next winter could equally be an issue, right? Because we're obviously going to go through gas stocks and hydro stocks. It's been a super dry year anyway. So the question is, how are we going to refill them for next winter? But yeah, absolutely. We need to just make sure that the market signals are there. Steffen, anything else that you wanted to add before we throw it open to the floor?
Not to add, but to repeat, let the market use the price signal the way it used it for so and so many years now. Let us exchanges do our job, meaning provide stability to the market from an operations side, from a risk management tool side of things. As I said in the beginning, the quicker that we overcome this more, may I say, economical crisis, we are able to shift focus back on environmental aspects of sustainability.
Izumi-san, anything last that you want to add?
Last one to me?
Yeah.
Well, actually, as I said, we are in the same shape, and we are expressing all the turbulence at the same time, and hopefully we're going to restart nuclear plants in Japan. And I was so surprised, you know, actually I was in Milano to attend Gastech early this week, and some people were talking about the Japanese nuclear power plants because to help the gas market situation. So, well, globally, we should do whatever we can do. That's the best thing I can say.
All right, it's been a good discussion. Who's got some questions? Gentlemen, yes. If you want to just introduce yourself and then fire away.
So Andreas Frank from S&P Global Commodity Insights, and thank you very much, very interesting. And while we talked, I checked the excellent EEX website in terms of transparency, and I tried to compare the Japanese Tokyo quarter head price. And if you could confirm, is it 280 in euros? The 41 yen, does that translate into 280 euros per megawatt hour?
280 euro.
Yeah, the 41 yen, I think, per kilowatt hour.
I think it's something like 40 yen, something like that.
So that would be 280 euros. I use the current exchange rate.
Yeah, I saw the article.
That was a good deal, and I'm sure many European traders probably would buy that one. If I then check,
I don't know, you know, dollar yen. If you look at the Japanese yen currency market, well, I'm staying here. Japanese yen keep falling against the dollar.
So does the euro, the euros?
I have to update my, Japanese yen
pound,
price now.
The pound at the 35 euro, euro 20 euro. 280 euros, around there, it would be considered extremely cheap in the current winter energy crisis for Europe. And my key question here is, but there's two things, and if I compare to France, it's obviously the other spectrum of the extremities. It's like today 800, but we did see 2,000 for some monthly contracts for winter because of the specific nuclear situation in France. The two question A is, that's the big debate. Is the TTF as the European price signal setter fit for purpose? That's probably one for Steffen. But Steffen, first to Philippe. In specific on France, and we started off with the French-Spanish cross-border things, the situation there, the market integration. Is there anything EPEX or exchanges, and not just TSOs, can do, the market can do, to step into the demand-side management, the near-term demand-side management? Near-term because the prices for the TTF are set at the premium to the JKM, quite a considerable premium to relate into higher power prices because of demand-side destructions for gas. So there's this debate where the TTF is not fit for purpose. Near-term and long-term, near-term, are there EPEX spot potential products one can develop to steer the demand? We've got intraday, but really that's all power side. If scarcity is a problem, what could be done there? And the second question, is the TTF fit for purpose?
But first of all, that's a very good question because I think the question on demand-side response is pivotal to address this, the current crisis. So this is very important, and it has been very important for power markets for the last 2 decades, but not much has been reached so far. And of course, the price level could justify the absence of demand reaction in the past. It won't justify that going forward with the current price levels, and especially if we have price spikes this winter. So first of all, the exchange sends the price signal. Now, who sees that price signal? Who reacts to the price signal? And that's the most important question that we have to answer if we want demand response to develop. So having consumers that are more reactive means they have to know how much they're willing to pay, means they have to see how much they're paying, and means they have to react. And that's not something all consumers can do. If you're a consumer under a regulated tariff in France, you don't have many incentives to decrease your consumption. The incentive you have is to keep doing whatever you've been doing so far, meaning consuming as much as you need to consume. And that's not necessarily the right reactions, the right market signal would not be well interpreted if the consumer cannot react. So that's one thing. The high prices have the potential of bringing consumers closer to the market, but of course they have to be exposed in some way or another to dynamic pricing. Fixed pricing with no smart meter is just not going to help at all. The other thing is some trading arrangements can be improved. For example, and this is true in the US, but also in Europe, the conflict between the aggregators and the suppliers on compensation of demand response activations. I don't want to sound too technical here, but there are things that can be done by the authorities to improve the way that demand response is activated and compensated for a supplier, for example, who would lose, whose consumer would be curtailed and who would face imbalances on the market. So not to be too technical, but there are things that can be done in the short term to make sure that demand response is scaled up.
Happy to take the second part of the question. Whenever you invent a new product that is supposed to give you more opportunities in terms of risk management, there is these two giants that fight with each other. They are called basis risk and liquidity risk. The more you reflect on a very specific risk profile, the lesser the basis risk. Okay, but maybe I'm the only one who can use this particular tool, and then I'm left with a huge liquidity risk. The success of TTF, from my point of view, speaks a clear language. A good balance was found. A lot of people can use it, and obviously it is very close to the basis risk that those people have in their books. I'm not saying that there is no alternative. The better is the enemy of the good, right? But whatever this new product shall be, or that new index or risk management tool shall be, it has to find, say, an equal answer to the question that I described earlier, this fight between basic risk and liquidity risk.
Just to touch on the point in the question, and Philippe, your response to that. the key really is, right, demand reduction. I mean, that's, and not just in the short term, but in the long term. You know, we've just gone through centuries of using energy as though it was, you know, we already had sustainable energy sources, which we didn't, and now we're realizing that. And some countries certainly seem more aware of that. There are already some measures. Greece, for example, Philippe, where the TSO has demand reduction auctions effectively. And I think it's something that people they're realizing now, right? Because, okay, well, what's happening today? Our new PM is announcing however many billions of pounds are going to be used to effectively subsidize consumers. People know that actually their consumption costs money. I had a friend actually who has one of those sort of meters where you plug it in and it tells you how much electricity that you've used. And they were like, oh, it costs me £1 to take a bath. I'm not going to take baths very often anymore. So this kind of awareness is something that is what we need really in order to structurally change the way we view the energy industry and energy, you know, as a good. Izumi-san, just how's the view on that from Japan? Is there a real sense of people need to, in a long-term basis, reduce and rethink their consumption habits?
Well, in case of Japan, we have a very unique system, actually. It's called a fuel cost adjusted system. So we automatically charge, you know, price to the customers. However, that is not actually working anymore because the market turbulence is so volatile now. And more and more people are, well, especially industry, start thinking to hedge longer term. Yeah, because to sustain their business, they have to think about how to secure their, you know, source of the power. And that kind of things are already, I think, happening in Japan, even in the Japanese market. So the mixture of the short term and the long term is really, really important to keep running the business. I think that's my view.
Yeah, that's really interesting, actually. And, you know, talking about dynamic pricing as well, and going, again, back to the concept of an exchange and providing a price signal, if people don't know what the prices are, you know, for example, in their peak or off-peak times, then they're not going to shift their consumption habits. And in order to make people aware of what the prices of electricity are at certain times of the day, then you need a platform for this to function on, right, Philippe? You think that's
Well, first of all, reaction will avoid destruction, and I hope we can avoid destruction. There's a risk also that we destroy demand this winter or in the coming years if the prices are very high and there is no reaction. By reacting, we're avoiding the destruction, and that's why this is so important now. Do consumers need a platform for that? I mean, they first need a smart meter, because if they don't see how much they're consuming at some point in time, if they don't have the load curves, if they don't see prices, there's not much you can do. So this is the starting point, and it's not directly linked to the exchange itself, but it's linked to the distributors, system operators, putting the right, and the suppliers, of course, putting the right components or the right software to make sure that the consumers can see. Only then can they react, and they can react in so many different ways, by postponing a usage or by reducing their thermostat by a couple of degrees. I mean, there are so many possibilities, and I would almost say we are in a prehistoric age for electricity consumption. We have to move away from that, and the crisis is giving the elements to do that. So even if this is a difficult situation, and for the most vulnerable consumers, there have to be some solutions by the authorities, we also need to move ahead and see this as an opportunity to make the energy transition a reality and to have a market with both sides working well, because that's a precondition to the integration of large amounts of renewables.
Yeah, thanks. Any other questions? Because I realize we're probably getting fairly close to the end now. Did anybody have anything else that they wanted to ask? No? Okay, cool. Well, let me just thank everyone on the panel. It's been a good discussion, and one that is not going away anytime soon. If anything, these discussions will intensify. So it's really great that there's this platform here for us to have this discussion in an open context. And yeah, I'm sure if anybody wants to follow up with any chats or anything with any of us afterwards, we'll be around. So yeah, thank you very much.
Thanks, Justin.